Welcome back, everyone. Today we're diving into a topic that could fundamentally change how cross-chain trading works, and why Radiant might just be the blockchain that'll make it happen. In decentralized finance, few challenges are as complex or as important as enabling true peer-to-peer trades across blockchains. We're talking about a world with thousands of assets and hundreds of exchanges, yet most transactions still rely on trusted intermediaries, wrapped tokens, or fragile bridges. And let's be honest, these solutions come with risk, whether it's custodial failure, hacks, or just unnecessary friction. But imagine a system where you could swap Bitcoin or Radiant or Dogecoin or Litecoin without relying on anyone else. Just two users, two chains, and code. That's the vision behind Gravity, a white paper stage protocol aiming for trustless cross-chain trades. While Gravity is still theoretical, the foundation it requires already exists, and that foundation is Radiant. So, what is Gravity? At its core, Gravity is a protocol for exchanging assets across blockchains without a centralized exchange, a DEX, or even a bridge. It uses a simple principle. Each party commits to a trade on their own blockchain and proves that commitment to the other party using cryptographic evidence, namely block headers or Merkle proofs. Here's an example. Alice wants to swap Bitcoin for RXD, and Bob wants to do the reverse. They don't send their coins to a shared escrow or Ethereum smart contract. Instead, they lock their funds on the respective chains and provide simplified payment verification proofs to confirm each side has completed their part. Once those proofs are validated, the funds are released automatically. No trust, no middleman, no risk of one party running off with the funds. You can only claim what you're owed if you can prove you did your part, and that's a game changer. Now, why is Radiant uniquely capable of making this work? The Gravity concept is elegant, but implementing it requires very specific technical conditions that most blockchains today simply don't meet. Radiant, however, is built differently. It combines a UTXO-based transaction model like Bitcoin with a Turing-complete scripting environment. That means complex conditional logic can be executed across transactions. It works on proof of work, giving energy-based finality and decentralization without relying on staking or validators. And most importantly, Radiant smart contracts can validate SPV proofs from other blockchains. In other words, a contract on Radiant can confirm on-chain whether someone has locked Bitcoin, Litecoin, or another POW asset on its native chain. No oracles, no custodians, no wrapped tokens, just data already secured by consensus. With this architecture, Radiant isn't just a participant in Gravity, it's the chain that makes the protocol feasible. It acts as a neutral, programmable settlement layer, ensuring trades happen securely and automatically without ever holding funds itself. This opens the door to a range of possibilities beyond simple swaps: private peer-to-peer exchanges, cross-chain remittances without fiat ramps, decentralized OTC markets, and ecosystems of tools and trade assets without bridges or wrapped tokens. Essentially, it's a step toward a truly trust-minimized financial internet. Of course, we have to be realistic. Gravity is still at the white paper stage. There's no testnet, no production code, and no implementation team yet. Why? Building a system like this requires deep technical knowledge, understanding Bitcoin internals, creating efficient SPV libraries, standardizing block header formats, and coordinating cross-chain events. But Radiant is the closest of any blockchain that has come to providing the necessary architecture. It has a fully functional Turing-complete scripting language, UTXO-based smart contracts, low fees, fast block times, and the ability to verify external block headers in a trustless manner. In short, Radiant is ready. Gravity is the blueprint, execution is the missing piece. So what does this all mean for crypto? If Gravity becomes a reality, Radiant could sit at the heart of a new ecosystem of cross-chain trading, not as a bridge, but as the settlement layer itself. Trades could happen directly, automatically, and without risk, fundamentally reshaping how we think about interoperability. And even beyond Gravity, Radiant's architecture positions itself uniquely for broader DeFi innovation. Its scripting capabilities and UTXO model allow developers to build complex conditional systems that other blockchains struggle with. From peer-to-peer payments and remittances to automated marketplaces, the potential is enormous. To sum it up, the Gravity white paper offers a glimpse into a world where blockchains interact directly and securely. No bridges to hack, no wrapped tokens to collapse, no custodians to trust, just users, chains, and proof of work. Radiant may not have been designed with Gravity in mind, but it turns out to be the perfect fit. Its design, structure, and philosophy align perfectly with what gravity needs to move from theory to practice, so while the protocol itself is still on paper, Radiant gives it a foundation in code and a future within reach. If we see adoption, development, and execution converge, Radiant could become the backbone for a new era of trustless cross-chain trading. That's it for today. We'll keep tracking developments in Gravity and Radiant because this could be one of the most important advancements in decentralized finance in the coming years.